The problem is that, and again, and then another fellow that I sent you in the last little while has been a client of mine for 10 years, has big league financial people in the States, and they suddenly realize, wait a minute, you're living in Canada, we can't deal with you.
Yeah.
And you have a solution for them too, also one of the variable annuity things. And your solution, I think, is to roll it into an IRA, is it not?
No, in that case, we may just trigger the unfortunate part of this gentleman's investment thing is that the insurance annuity, because we have to back up, is it really suitable for him in a stage of life, and is it
Yeah.
consistent in what he wants to do with his objectives going forward? And having met with him, my recommendation is that it's probably not the right thing for him.
Well, I told him that 10 years ago.
Right. And that we should probably just get rid of it, and we should simplify his life and put it into income-producing investments, which can give him some cash flow to live off. So I guess in his case, what we did is we better just went right back to square one and said, never mind the investments you have. Let's start with what you need as far as an investment program, and let's just sort of, what do you need? Do you need income? Do you need capital growth? What do you want to have U.S. dollar investments versus Canadian? What are your expenses in Canadian dollars or U.S. dollars?
Yeah.
All this is the very basic stuff. So we just went right from there and said, okay, let's forget about what you have for a moment. Let's just define what you need, and then let's see if we can take what you have and convert it into what you need, and then we'll go from there. And that's the way we'll do it. And he agreed. And once he'd thought about it and pointed these things out, he says, you're absolutely right. So we kind of simplified his life, and I think if there's one thing to be said in the cross-border business, if I gain any sort of, when I get feedback, compliments from people, the issue is, it comes back always, thank you for simplifying my life.
That's what everybody wants.
Right?
Simplification.
A good example is we came up and started with a variety of U.S. clients who have Canadian liras.
Yes.
We sort of, interesting enough, most of these clients did not know that you could unlock a lira.
You can unlock it now, yep.
So we've been unlocking several in the last couple of quarters, not several, more than a few, to simplify their life. Don't need two accounts. You don't have to be constrained by pension legislation. We can roll that into your RSP, one account. Not only that, we can dual up and have dual settlement currencies in a single account. You don't need two accounts. We can break down these.
Don't need to do an exchange chance for money each time at the 5%.
We can simplify, get the record keeping down to a manageable lot.
And you do all this.
And we do it.
Not a very big fee. It's like what, 1.5%, 2.5%?
1.5% is what we charge, and
that's the lowest I know of, isn't it?
Well, investment management fees, for example. I mean, we get accused of, not accused of. I mean, say, well, gosh, that's high.
Well,
for example, this client today was in this variable annuity contract, for example. Well, the expense ratio in these variable annuity contracts is substantially higher than most mutual fund.
You got it.
Expense ratios, right? Was it 2.5%, 3.5%, 4.5%? But it's embedded within the products they own.
Don't know it. Well, that's the same. That's what I had to do, is explain to this fellow, because he phoned me like 4 times. He said, "Well, but he wants to charge me 1.5%." I said, "But you're already paying 2.5%."
Exactly.
And he had no concept that he's paying a fee within his mutual fund.
And this is true of
and his variable annuity
investment management programs in Canada and the United States. In Canada, the standard sort of, if you've got $500,000 in your investment, what they call a wrap program at a brokerage company, it's 2.75% plus commissions and so forth to execute the trade. So you're talking 3-ish or more.
And then you've got your exchange on when you want to buy some IBM shares. They're down in the States. You're paying.
Oh, sure. So you've got all these additional charges. So the answer to your question, 1.5% is probably the lower.
I don't know how the heck you stay in business at that rate, unless you got multi-billions of dollars.
Well, no, it's at the lower end. But you know what? We just revised our fees. Here we had a bit of a tiered fee structure going into the last year for 7 years, and we were charging quarterly in arrears in the States. We're charging monthly. So we went to, as of this last January, went to a flat 1.5% to $2 million of value per account. and 1% after that. If you got 3 million, the first 2 million is at 1.5, the next million's at 1.
Now, one of the things that I find interesting about what you're doing, and we're going to get to what you wanted to talk about today, which is Americans moving into Canada,
Right.
Canadians moving into the States, or really what we were talking about, what you wanted to talk about is people coming home or going home.
Yep.
But I do want to get back into this because when you talk about the 1% or 1.5% that you're charging, that's a tax deduction, it's a
That's
management fee. And
Well, let's maybe want to clarify that. In Canada, it's tax deductible if it's an investment account. It's not a deduction if it's a registered account.
well, I understand that.
Right. In the U.S.,
the-
it's subject to the 2% inclusion amount.
Yeah,
right?
that's right, that's right. In the U.S., you can do it, but it is a deduction in the U.S.,
Yes.
which is an intriguing. I had that question to answer on the internet site the other day.
Well, for example, I mean, in whereas you buy a mutual fund because the internalized expense ratio, say 2 or 3%, there's no deduction, right?
Nope.
So,
But you didn't get the money in the first place, so
Oh, that's right.
it doesn't matter
what
much.
you'd see if you
Yeah.
don't see it, it doesn't
If
hurt.
you don't see it. Well, we had one client here with a $27,000 BMO management for a managed account, charged for, I don't know, 4.5 years when they came in, and nobody had been claiming it.
Yeah.
And they were U.S. Canadian.
Yeah.
Nobody claimed the U.S. return or the Canadian return because it was just missed.
Yeah.
And
I'd like to bring up one other issue when it comes to for cross-border consulting services and fees and this type of thing. You know, people call, I know they call you all the time for advice on immigration and taxes and so forth. And sometimes we get the calls, we'll refer them to you or vice versa. But, you know, we know that a lot of folks out there in the accounting field and in financial service field charge substantial amounts for cross-border financial
well, I
planning.
do. I charge $450 an hour.
And, you know, some
I think it's
fee-based
cheap sometimes.
Well, some fee-based financial planners pay, you know, $5,000 to $15,000.
We both know one firm in Phoenix that charges $15,000 to walk in the
Yeah.
door to start off with.
Which is fair enough. Maybe they bring value to the table. You know, I was asked the question the other day. Well, how are you different? Well, I said, well, number one, we don't charge a financial planning fee, and we don't hold out as financial planners. You want our advice and so forth. We're primarily money managers.
Mhm.
You know, we'll advise you on some of the basics of cross-border stuff, but we'll consult experts like yourself or an immigration lawyer where people have the independent choice to choose another professional in the field who does nothing but that stuff.
Well, you know that on my website I've got Gary Govan mentioned,
Yeah.
I've got Vandenberg mentioned, Steve Peters,
Right.
Kevin Nightingale,
Right.
Brad Howland. I got 7, 8 people.
The idea is the same, right? You
Yeah.
you get somebody expert, so we have a team of experts to.
But do you recommend other people that do what you do, or you just recommend I recommend other people that do what I do.
Yeah, no,
They're
I understand
direct
that.
competitors.
I understand that. I don't know anybody in our business that I would prefer to refer to if it wasn't for us.
Well, that's an interesting way to do it. I just say I can't handle it. Here's where you go if you're not. And what do you do when you've got a client and they get a divorce and they want somebody else, a different
Yeah.
company, etc.,
Yeah.
to handle their affairs? Because that's a real factor. They don't trust. They want to have their
Yeah.
own advisor.
Well, there's other options out there. I mean, as you said, there's other licensed persons in the country. Not that many in the U.S., more in Canada. I think it's fair to say that people in our business or my business have higher thresholds. If there are money managers who are licensed in the U.S., but they're going to want $1 million, $2 million minimum, maybe to
get
make
started.
it worth their while. They're not going to talk to you unless you've got $1 million, perhaps in a lot of cases $2 million.
And
They're big shops.
And you're sort of $200,000. Am I correct?
Yeah,
in that?
our for us, I mean, our minimum we prefer to have around 250.
Yeah.
You know, if you have a bit more, fine. To 2 million in that area. We have larger accounts than that.
But you've been talking about bringing some smaller blended
Well,
funds
we
into.
we
What's
are
happened with
actually.
that?
I'm glad you asked because we're about a month
Must be
and a
getting
half
very
away.
close to that.
We're about a month and a half away from launch. One of the issues, as we've talked about in this show over the last year or so forth, is we do typically when an account comes to us, it comes there me a family with a total value of say 400, 500, 700,000, whatever. But it'll be 3 or 4 accounts. It'll be
Yeah.
an investment account. It'll be an RSP. It'll be Mom's RSP, you know, which might be 75 or 100 and a quarter, or a lot of it, David, where it comes from is these younger people who go down in the States to work on a visa.
Yeah.
So they've had an opportunity to say get 70 or 80,000 into an RSP, and then they've gone, right? So it's kind of too small for
Well, that's the problem that I've had, is finding somebody to
Exactly.
look after this guy
So-
with $50,000 or
Yeah.
$70,000.
So one of our issues was, of course, as a segregated asset manager, that means we manage individual stocks and bonds and manufacture and manage portfolios of securities. And we may have 30 to 40 securities in the portfolios at any one time. Is that when you only have $50,000, when you, even at our cheap institutional rates that we trade at, it gets very expensive. So the answer was to come up with an investment pool. So as of hopefully by April, we'll have, we're calling it, we're going to have a Canadian investment pool, and it will be a minimum of 25.
You're going to a minimum of 25.
yeah.
Let me,
And-
because you were
Yep,
talking
right.
50 at one time.
Yeah, we're going to go